Hello and good morning everyone. We have been doing chapter 7 from part 1, dissolution of partnership form. This is the 5th lecture again of theory, but in today's lecture we are going to understand the journal entries. So still this is considered to be a part of theory. And from next lecture onwards, next to next lecture, we are going to start with the exercise. Yes? So, 5th lecture consisting of the most important theory for solving the short questions, 3 marks. As I said, there will be 2 questions from this chapter, each of 3 marks. And also an MCQ and VSQ. So in 3 marks question, most probably it is about journal entries, true, false, and also it can be a theory question Yeah? Let us quickly revise whatever we have done so far. In the very first lecture, we've understood the meaning and definition of dissolution of partnership and partnership form. We've also understood the difference between these two. Further, we've understood the methods for dissolution of firm in detail. Then we've understood about legal provisions and its accounting treatment. Further, we have also understood the general procedure of dissolution. Then we have had an idea about the preparation of necessary accounts at the time of dissolution, which are realization account, partners' capital or current accounts, partners' loan account in case if any, and cash and bank account. Yeah? We've understood realization account in detail. I said this account is most important. A question might be asked like write down a short note on realization account. So I've asked you to study that topic thoroughly, which was also the homework. In last lecture, I asked you to write down the short note on realization account. And we've also understood how to prepare realization account. Yeah? So, as I said in the previous lecture, that from next lecture we are going to start with journal entries. So, here is the topic for today, which is journal entries related to realization account and the accounting treatment of dissolution. That how to deal, what are the accounting effects given for all the items at the time of dissolution, which can be assets, liabilities, reserves and accumulated profits, or else the debit balance of profit and loss account. Yeah? So let us understand how to deal with this topic. Alright, I hope you have gone through all the previous lectures, all the 4 lectures related to this chapter. So the 5th lecture for today, the main topic, journal entries. You can also use your textbook. The topic that we are going to start is given on page number 279, part 1, chapter 7. I repeat, it is given in your textbook on page number 279. Yeah? The journal entries Fine, let us quickly begin and see what is the first topic. Okay, it says balances of accumulated reserve and undistributed profit. Okay, please understand. You've understood chapter 5 and chapter 6. Yes? What you used to do during that time with the balances of accumulated reserve and undistributed profit? Obviously, in chapter 5, you used to distribute it among old partners, and in chapter 6, you used to distribute it among all the partners. Yes? And you used to distribute it always in old ratio. Yeah? Fine then. So let us see the journal entry for this. Here is the journal entry for reserves and credit balance of profit and loss account. I hope by now you know what are reserves. Reserves can be general reserve and investment fluctuation fund, etc., etc. Yeah. So here it is presented on your screen, the journal entry: reserves account debit, investment fluctuation fund account debit, workman accident compensation fund account debit, profit and loss account, which is profit debit to partners capital account. Being reserves and undistributed profit credited to partners capital account in their profit and loss sharing ratio. Understand, the topic is reserves and credit balance of profit and loss account, which is profit. Firstly, these things are given on liabilities side of the balance sheet. Balance sheet is always having two sides, and these are the balances given on credit side, that is the liabilities side of balance sheet. Now the dissolution of firm takes place. So what to do with these items? I mean the accumulated reserves and undistributed profit. Obviously, the credit balances are to be credited in partners' capital account. That means this amount is to be given to the partners in their old ratio. I mean in their profit and loss sharing ratio. Here there is no question of finding out new ratio or any sacrificing ratio, gaining ratio. No, because the firm is about to end. It is not about admission, it is not about retirement, it's just the end of existence. So obviously a single ratio is to be considered, the one which is provided in the question. Yeah? So reserves is given on liabilities side. The amount of reserves will be credited to partners capital account, and this is the reason reserves account has been debited. That means this account has been closed. Yes, basically this is given on credit side of balance sheet. Just because the amount is credited to partners capital account, this is debited here. This means reserve account has been closed. If you remember, whenever you want to close any particular account, you need to give the reverse effect. Say for example, if you want to close a purchase account, yes, so it is closed where? In trading account. We have understood this in journal proper, yes. So this way, all these items, which is reserves, investment fluctuation fund, workman accident compensation fund, and profit and loss account, the profit, these are to be credited to partners capital accounts. That means the balances of these accounts will be given to partners in their profit sharing ratio. Alright? Then Yes, let us read the narration. Being reserves and undistributed profit credited to partners' capital account in their profit and loss sharing ratio. So this is the journal entry for reserves and credit balance of profit and loss account. It is really important for you to understand this first, then to write it down in your fair book, and also to memorize the same, because we are going to solve the questions given in your exercise soon, which are completely based on this journal entries. We are going to start with the question 5 in your exercise, in which you have to write down the journal entries. The questions prior to that in your textbook are all about theory. Are all about theory. And theory we have completed in 4 lectures. And today we are dealing with journal entries so that you can deal with the practical sums. So please pay attention, try to understand and learn the same. Alright, let us see. So this was the first topic, and let us see which is the second point in the first topic. It is debit balance of profit and loss account, which is loss. Now, debit balance of profit and loss account. This is given in the balance sheet on asset side, which indicates loss. So at the time of loss, partners' capital accounts are to be debited and profit and loss account is to be credited. Obviously, if the amount of profit is given to the partners, obviously the amount of loss also is to be written off among partners' capital account. So in case of loss, partners' capital account is to be debited, and profit and loss account is to be credited, which is basically loss. And thus profit and loss account, the loss is closed. Being debit balance of profit and loss account is debited to capital account of partners in their profit and loss sharing ratio. Alright? Fine, then let us see which is the next topic. The second topic, when assets accounts are closed and transferred to the realization account. If you remember, while understanding the general procedure of dissolution, I highlighted a point that at the time of dissolution, the very first thing is that you will sell all the assets. But before that, you need to close assets accounts. Yes? You'll have to close down the accounts of all the assets and you will have to transfer it to realization account. Yeah? So let us see what is the journal entry for that. Once you close down these accounts, only then you can sell them. So when assets accounts are closed and transferred to the realization account, all these journal entries are extremely important to understand and learn. The practical sums are completely based on this. I repeat this again and again. Yeah? So now you know very well that assets always disclose debit balance. Obviously, the basic balance of assets is debit balance. And at the time of dissolution of a firm, except cash and bank account, we already know this, all assets accounts are disclosed in balance sheet and transferred to the debit side of realization account at their book value. Most important point. To close assets account, their accounts are credited, that is land and building, plant and machine, furniture, investments, debtors, goodwill, patent, etc., etc. So what they are trying to say basically is that all the assets, you know very well the assets are having debit balance disclosed in the balance sheet. Yes? So all these assets accounts are to be closed and are to be transferred to realization account. Yes? Except for cash and bank. We have understood this point in previous lectures that the cash and bank balance is not to be closed and transferred to realization account. Just in the previous lecture, 4th lecture. Yeah? So let us see the journal entry. So basic balance of assets is debit. Once they are closed, they will all be credited. This is also given in your textbook. If you want to see, it is on page number 280. Alright? Okay. So realization account debit to land and building, to plant and machine, debtors, bills receivable, furniture, other assets. All the assets are to be credited and realization account is to be debited. Why? Because this is the time of dissolution and here all the assets accounts are closed and are transferred to realization account. So this is the journal entry for the same. Yeah? Okay, we have an important note to be understood here. Yeah, on the date of dissolution, balance of cash or bank account disclosed in the balance sheet is not transferred to realization account. Why? Because its separate account is prepared and same balance is disclosed. Yeah, because realization from sale of assets and payment of liabilities are shown in the cash account and surplus is transferred to capital account of partners. This is all about long sums and also these points we have understood in the previous lecture while I was explaining you about the preparation of cash and bank account. Yes? But for now, it is important for you to memorize this journal entry. I mean to understand this and to memorize this. Alright? So simple thing here is how to close assets account. Assets are having debit balance. You will credit them in the journal entry and you will debit realization account. This is the closing entry for, the journal entry for closing assets account. Alright? This is important. Okay, the next topic says, when accounts of provisions are closed and transferred to realization account. Understand, the provisions, their basic balance is credit. Once you want to close these accounts, they will be debited and they are closed and transferred to realization account. Yes? Okay, so bad debt reserve account debit. Depreciation fund account debit, discount reserve on debtors and bills receivable account debit to realization account. Yeah? So these are the provisions. They have been debited because their accounts are to be closed and are to be credited to realization account. Always remember a point that whenever you are writing the closing entry, the journal entry to close several accounts, firstly you should think about the basic balance and you should give the reverse effect. Assets are debited, so while you will close assets account, you will credit them. Like provisions are having credit balance, when you will close them, you will debit them. General reserve, investment fluctuation fund, they are all having credit balance. So while you pass the journal entry for closing these accounts, you will debit them. Okay? This is what you are supposed to remember as a logic. Yeah? Next, when liabilities accounts are closed and transferred to the realization account. Now liabilities, basically they are having credit balance. Yes? Liabilities are given on the credit side of balance sheet. So credit balance, if you want to close, then in the journal entry you will have to debit the same. Yes? So here you can see all the liabilities have been debited and realization account is credited. Right? So this is the journal entry for closing liabilities account. They are all closed and transferred to realization account. Alright. Let us see what is the next topic. Yeah. An important one. When assets are sold. Here we had a journal entry that assets accounts are closed and transferred to realization account. Why these accounts have been closed? Because the assets are to be sold. Why they are to be sold? Because the business is closing down. The partnership form comes to an end. So you have to close all the accounts, you have to sell all the assets, and you have to make payment towards all the liability. So let us see what is the journal entry when assets are sold. Okay, when you sell these assets, the journal entry is cash and bank account debit to realization account. If you remember, while understanding cash and bank account in the previous lecture, I clearly instructed that the balance of cash and bank account is not to be transferred to realization account, and there was an important highlighted point that all the cash receipts and cash payments at the time of dissolution are recorded in cash and bank account. So apply that point here. The amount that you have realized from sale of assets is to be transferred to cash and bank account. Yes, so the journal entry for the sale of assets is cash and bank account debit to realization account. That means the amount that you have realized from sale of assets is to be transferred to cash and bank account. Alright? You will surely understand these journal entries in a better way when we will be solving the practical sums. Yeah? Okay, let us see what is the next journal entry. Okay. It says, when assets are taken over by a partner. Now sometimes it happens that that an asset is taken over by a partner. Yeah? So during that time the journal entry is respective partner's capital account debit to cash and bank account. Yeah? I repeat, whichever partner has taken an asset, his capital account will be debited and cash and bank account will be credited. Yes? These journal entries are also given in your textbook on page number 281. Okay? Now, while solving practical sums, you will be clearly instructed about that what amount is actually realized on sale of assets. Say for example, there is a furniture of rupees 50,000. You have closed furniture account and transferred to realization account. Now you are going to sell this. So how much amount is realized on sale? It is not necessary that 50,000 ka furniture hai, so definitely we are going to realize 50,000. It is possible that it is sold for 45,000 or 40,000. So this will be instructed in your sum. Yes? So in case if it is not indicated, necessary instruction will be given in the question. that nothing is realized for this particular asset or this much is realized for this particular asset. Yeah? Alright. The next topic is when income is received from unrecorded asset. Okay, let us see. Now you have received an income from an unrecorded asset. So obviously cash comes in, cash and bank account debit to realization account. Now this is an unrecorded asset. So this asset cannot be closed. Directly the journal entry for its sale will arise. Yes? Okay, the next topic, an important topic, is when liabilities are paid. Try to understand. You have understood this, that assets are sold. So amount is realized. This is sale of assets, or asset has been taken over by partner. That means during that time his capital account is debited. That means the amount has been taken from partner's capital account. Yeah, and then income is realized from unrecorded asset. So in short, all the assets have been cleared. They have been sold, either taken by the partner, or the unrecorded assets even have been sold. Now where do you utilize this amount? The amount that you have received on sale of assets? For the payment of liabilities. Yes? Let us see. When you pay the liabilities in cash, realization account debit to cash and bank account. This journal entry is just opposite to the sale of assets. This has been reversed. This is when you receive the amount, and this is when you pay the amount. Yeah? Just reverse the journal entry. This journal entry is for the payment of liabilities. This topic is given on page number 282 of your textbook. Yep. So realization account debit to cash and bank account. This journal entry is for the payment of liabilities in cash. Yeah. Next topic. Now whenever a partner accepts to pay the liability, when liabilities payment is accepted by a partner, during that time the journal entry is a realization account debit to respective partner's capital account. Again, if you see, this journal entry is, I think, reverse to this journal entry. So all I'm trying to say is, if you will learn one topic, you just have to reverse all this in the second topic. Yeah? So what is the journal entry when the liability payment is accepted by a partner? Realization account debit to respective partner's capital account. Simple? Okay. Then when unrecorded liability is paid, this is the journal entry for payment. This is again a reverse to the realization of unrecorded asset. It is cash account debit to realization account. Here it is realization account debit to cash and bank account. See, this is all reverse, just opposite to the topic of assets. So if you will learn that topic, it is easy for you to understand this. I mean to memorize this. You will just reverse the journal entry. Yes? So this journal entry is for the payment of unrecorded liability. Yeah? Alright then. Realization account debit to cash and bank account. Okay? So we are done for today. And this is your homework. You will write these journal entries with narration. Yes, in your fair book. You will read this carefully and then you will write it once in your fair book. Alright? Please go through the lecture thoroughly, and we'll see you all soon in the next lecture with the journal entries ahead. Till then, stay home and study well.